Hi, this is The Business Guy. All the news stations I've been watching lately have been talking about the Fed raising the interest rate 75 basis points or 0.75%. And the Fed, of course, did this to help stop inflation. It's a slow inflation we've been having, and it's kind of weird. Now, I don't want to get into all the political garbage, but here's the thing, okay? If inflation is caused by, and there have been many times in our history where the economy just gets booming and the economy is just on fire, it's white hot. And by the way, if you really appreciate this insight on this very hot topic today, please click the like button below. I'd really appreciate it. YouTube will promote this video more when you do. And if you want more information like this, please click the subscribe button if you haven't already, so that when more videos come out like this one, you'll be up to date right away. And if inflation is caused by that, an economy on fire, a rise in interest rate can help slow inflation. But the inflation we're currently experiencing in the world is not caused by gas prices going through the roof, because basically this administration stopped domestic oil production. They stopped the pipeline from being completed so we can actually move our oil at an economic price around the country. And I understand there's ecological concerns and all that, but I think there's ways that can be done safely. So basically it's being done because this administration is trying to be green on energy. And I understand that. Sure, I want a great environment too. After all, I drive a Tesla, my wife drives a Tesla, so we're not out there polluting. Well, maybe the power plants generating the electricity for the cars are, but they say that power plants, energy production facilities, are much, much more efficient than everybody driving around in individual automobiles. The efficiency, when you do the analysis, is much more by driving an electric car. That's just my opinion. You can drive a gas car if you want to, but I'll tell you what, I love not going to the gas pump. I just love plugging my car into the outlet in my garage. It's been incredible. But I digress. This inflation is caused by the government paying people not to work, and consequently they didn't work, and those that were working charge more, so it takes $30 or $25 an hour to put bread on the shelves now, and you used to pay $10 an hour. And by the way, the price of bread reflects the cost of labor. So they disrupted the labor market by the government's interference, and this caused inflation. And also, as you know, we had supply chain interruption because of the pandemic. So a supply-demand issue. If the supply is choked because it's taking so much time to ship sufficient goods into our ports and get them into the hands of the people, this is going to cause inflation. But none of these things are being affected by interest rates. Plus, you have the war in Russia that's driving up fuel prices, and putting all these things together, the Fed raising the interest rates is doing absolutely nothing to stop this set of inflation. So with this rise in interest rate, they're really at the wrong party and they came too late. So it's energy, labor, and supply chain. Those are the real problems. And none of those are impacted by interest rates. None of it. I mean, the gas prices are not the result of interest rates. It's the Russia thing, mainly, not the white hot economy. I mean, we had real estate prices booming because of the lower interest rates, because houses were more affordable. The monthly payment was more affordable. So certainly interest rate affected that sector of the economy. But we had other major shortages. And the supply chain disruption was running, for example, lumber prices up. In fact, lumber prices are back down 33% this month. So you get ready to build, and a house is now 33% cheaper on the lumber portion than it was this time last year. I mean, right now, in my opinion, this is the perfect time to buy stock. I mean, when do you make money? You buy low and sell high, right? Right now, it's buying low. It's a great opportunity to make a bunch of money. And if you go down to the description, you'll see this link to a company called Webull. You've probably heard of it before. And I'll tell you what, they really, really do have a great platform. It's discount or zero fees when you trade stocks. I mean, when I used to trade stock, I used to have to pay $253, for example, to make one trade. I had to pay the broker. I had to call them on the phone, and they would buy it and charge me a tremendous sum. But now it's like almost free. And if you sign up, they give me a little kickback, and so don't just sign up through them. Sign up with this link down there. It'll help me out. Plus, when you sign up with the link down below, Webull actually gives you 4 stocks. So what you have to do is just click on the link, open up an account, and if you deposit even a penny into it, they'll give you 4 free stocks. So it's better right now than ever. So go ahead and click on that now and take advantage of it. Okay, so the inflation is really correcting itself, and yet the Fed rises rates, but everybody is panicking and freaking out, and the real truth is this doesn't do much, except for probably further driving us into a greater recession, causing the economy to slow down. They're slowing down the economy, which was already slowing down and heading into a recession. So we're getting ready to have something fairly unusual, which is inflation during a recession, and it's fairly unusual because this economic thing, usually those two are somewhat connected in this case, because the speed or velocity velocity of the economy was not the cause of inflation. You can actually have inflation caused by, he wanted domestic fuel policy or fuel supply policy. So the administration is straight up causing this. And I'm not trying to get political here. I'm just giving an observation. So this is straight up causing that sticker shock at the pump. But the supply chain issue is not the government's fault. Now, the fuel supply issue is big time because the president doesn't control the supply chain, but he does have influence whether we can continue getting oil out of our own territory and piping into the places where we need it. So in this case, the Fed is acting dumber than a box of rocks because they simply used the wrong tool. They came to the wrong party and they were too late. So what is your solution if you're the Fed? The best move the Fed can make at this point is just to sit back and let things resolve themselves. After all, we're in a capitalist economy. So let's let it correct itself and it will heal itself faster and we'll have a softer landing. And it's people acting in their own best self-interest and it'll heal itself faster if you let it run its course. Let these supply chain shortages run out and do whatever you can with policy or regulations to smooth it out so they can get stuff out on the ports and get people in stores again. So right now, the government has screwed things up. You got billions of goods sitting on the seas, for example, in the port of LA, and the labor unions are slowing down the distribution of these goods to the people because of their dumb butt policies. So you have billions of dollars sitting there for months, and that's all stupid government regulations. So we should just wait and let things smooth themselves out, but you can't fix it by slapping people with high interest rates. And you can't fix it by just throwing money at people. After all, that's not government money. That's money from your pocket that's being thrown out there. And they're probably doing that to try to buy your vote. And then you wouldn't have the labor market disruption. And in my opinion, it'll just straighten itself out. So quit throwing money at it. They'll have to stop that. So if throwing money at it and now rising the interest rates, it just becomes a vicious cycle because things become even more expensive. You have to pay people more to afford it. We see what's happening now with the economy slowing down with a recession. And a recession is 2 receding quarters in a row of the gross domestic product, which is a measure of all the goods and services, the GDP, in 2 consecutive quarters of being smaller. And that's the definition of a recession. So the economy is slowing down. And guess what happens to these companies when they're not selling as much? And that's the definition of an economy slowing down. And guess what happens when they don't sell as much? They start laying people off. And guess what happens? They don't have as much profit. So Wall Street looks over and says, hey, company, you're not as profitable. So the stock goes down 20% since the first of the year. And we got a bear market to add to all the mess. And it's all because these goobers won't keep their fingers out of the pot. So the key thing is back off, dingbats. Let this thing do its thing. And you've got the economy. The economy in the United States is a magical thing. It's a capitalist system because there's a bunch of individuals all acting in their own best self-interest, short-term and long-term. If there's a shortage of some particular product, you have a company out there that's going to manufacture it and things work themselves out. So what really is this interest rate thing we're talking about? It's the interest rate that banks charge to each other, and it's going to go up. And if somebody's dumb enough to have credit card debt, it's unlikely that'll go up. Heck, it was already 18%. So what are they going to raise it to 18 3/4? So what's going to happen is it's going to go to car loans and they're going to be more expensive and student loans and the interest rate is going to go up on those things. And if you're currently sitting out there, and like we say on this channel, don't borrow money. Only borrow money on a mortgage and pay it off early. If you buy a car, if you can afford the payment for a car, then set that same amount aside each month and pay cash for the car. You get a way better deal than you will by saving money on interest that happens to be going up right now. So if you already have a student loan, that's fixed. If you have a mortgage, that's fixed. Even if you have a car loan, which I don't recommend, that's typically fixed. But if somebody makes, in my opinion, a financial mistake and makes monthly payments on cars, well, that's going to be higher. It's going to suck more money out of your budget every month. So don't do it. Set that same amount aside every month, like we just said, and pay cash for the car. So the key thing is don't do stupid stuff. Don't go out there and borrow a bunch of money. So this interest rate thing doesn't affect the people because you're not out there borrowing a bunch of money. So follow the advice we talk about on this channel and don't go into debt. The Fed raising the rate won't cause your fixed interest rate mortgage to go up. That is if you already have a mortgage. But if you buy another house, naturally the interest rate's going to be higher. You're going to be paying more money every month. But when mortgage rates do have a significant increase like we've seen, it's going to make the stock market go down. And right now it looks like we're going into a bear market. And that's what usually happens when interest rates spike. So thanks for watching my analysis of the interest rate situation. And if you really follow the recommendations of this channel, you can just sit back and eat popcorn and watch the show. It's not going to affect you. If you're really following what we recommend here, then it's not going to cause you to panic. So please click like, subscribe, and share this video with others. This is the Business Guy.